What's up, everybody? It is Thursday, July 23rd. What's going on? Got a haircut today. This is a homemade job. How's it look? Homemade job with the clippers. So, hey, remember I told you we're probably going to see an increase in weekly unemployment claims today in the data. Guess what? We had an increase of 109,000. That was the first increase since, I believe, March 24th. And I have been explaining to you, I have been showing you that the employment and withholding tax flows continue to go down. And I said, usually that's a pretty good barometer for what's happening in the labor market. And I said, you know, we haven't seen any stability in the other tax flows, like corporation income tax, and even before the big tax payments last week, they were starting to stabilize and move back up. So that was already given an indication that things were starting to stabilize. But the employment and withholding tax flow data, that kept going down. And I was already saying weeks ago, I was pointing out at the time that we were starting to see a shrinkage, a reduction in the weekly declines in initial claims for unemployment benefits. I mean, a couple of weeks ago we had, it was down like 50,000. Then it was down 10,000, then it was down only 3,000, and I was saying like back in May and part of June, it was down like over 300,000 a week. Those initial claims for unemployment benefits were dropping very sharply, and then they stopped dropping. And I said, you're going to see that pick back up again. And I mean, that wasn't a hard prediction because we see the virus cases spiking, we see new closures happening, we see the rollback of reopening, stuff like that. A lot of businesses shutting down and permanently shutting down. So this is bad. And yesterday, if you remember, I spoke to you about the petroleum data in the EIA weekly petroleum status report, and I pointed out gasoline demand is down at a 5-week low. Distillate demand is down at a 3-week low. Jet fuel demand is down. Refiner inputs are down. About the only thing positive in that report yesterday were exports of crude and exports of refined product. So, all right, that's looking pretty good. But everything else in there, crude oil inventories built back up, and they're building up. They're near all-time highs. And we saw a pickup in domestic oil production. 100,000. Domestic oil production is only down 200,000 barrels a day compared to where we were last year. So it's not like we had this big, huge collapse in domestic oil production. So it's going to be hard for inventories to come down, especially since starting in August, the OPEC Plus group, that's OPEC, Russia, they're going to increase production by 2 million barrels a day. So, but it's the demand side that concerned me, and it was the employment and withholding tax data. So, all right, the market finally reacted to some negative economic news today. Now, given this market and its almost, highly speculative nature, and how, you got 7 or 8 stocks that are really leading the whole thing up. Like, we don't know. People could jump right back in here. But ultimately, like some of you say, oh, you can't predict the market. And I've said this so many times. I don't try to predict the market. I try to forecast basic economic conditions. I invest around that concept. What are the fundamental basic economic conditions? Because ultimately, the market is going to follow that. Now, there may be periods of time where it looks like there's a disconnect between what the market is doing and what the actual economy is doing, or what the actual conditions are. And it might not be just that it looks like that. There could be a disconnect. Don't think that the market is very rational all the time and it factors in all these things. I mean, we've seen, these crazy moves in the past. Things go down way too much relative to conditions. Things go up way too much. That doesn't bother me. My job and what I try to do for you, for my subscribers, for myself, is to ascertain what are the basic conditions of the economy. Ultimately, your investments are going to follow that one way or another. That's what I do. I'm not trying to, hey, the market's here, pick a top, da-da-da-da. You get in based on the assessment of conditions, and then you manage that position. And only if you are wrong about your assessment of basic conditions do you change that. Otherwise, it's a management process. I talked about that with the dollar. For 2 years, the last 2 years as the dollar was rallying, and I said, it's not a fundamental based rally. These are portfolio shifts based on really nothing. And, if you want to, something kind of connected to that. When Trump was going after China with the trade war back in 2018, 2019, the story around that, the narrative around that was, oh, that's bullish for the dollar, trade war is bullish for the dollar, right? And every time he attacked China, that was bullish for the dollar. That was the narrative around that. Now he's attacking China, and if you read the stories, oh, that's bearish for the dollar, bearish for the dollar. I've said so many times, it's really easy to see where these arguments are just completely contradictory. And when you know they're contradictory, then you know that people are making arguments based on stuff they just basically don't understand. And you want to go against that. Now, is that a timing mechanism? Of course not. But I don't concern myself with timing. I've said in the past, this quest for precision, this quest for exactness is the destroyer of results. Action produces results. Taking action and then managing what you do, that's how results are. Nobody can predict exact. I don't concern myself with that. So let's follow the data. Right now, Congress, the Senate GOP is working with the White House to try to come up with a new stimulus plan. Here's what it looks like. A reduction in that $600 a week. It's going to basically boil down to something like $175 to $200 in that supplemental unemployment insurance benefit. No payroll tax cut. And I said that. They're not going to do it because they believe that payroll taxes fund Social Security, and that's totally wrong. And I can make a whole video on that. And what else? I don't know, everyone's going to get another $1,200 check. Not sure that's going to be enough this time. With the economy, still in large part closed down. We're operating at low capacity here. And a lot of people are not just out of work, they're permanently out of work now. All right, everybody, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. Remember, I am the only one who has an applied approach to MMT. A lot of academics out there talking about MMT. I'm the only one who has an applied approach. And don't forget to listen to my podcast. The links of both of those things, my website and the podcast, right here in the description below. See you tomorrow. Bye.